Hi everyone, and welcome back to another simple daily practice drill I think you can use to become a better trader. In this video, I'm going to review the price action from yesterday, the 14th of February 2025, and I'm going to recommend at least 5 different drills that you can practice, which would have helped you find yesterday's swing setups. There are many great traders who do end of day reviews. One of the challenges we have as traders is developing the skills needed to spot those setups as they're forming, as opposed to once we have the whole chart in front of us. Now, some of these drills I already have videos on, which you can take a look at my YouTube channel or my blog, zentradingtech.com. Others, I'm in the process of making videos for these, but I'm going to explain all the drills really simply in this short video. So let's go and take a look. So drill number 1, yesterday was a strong bull bar, and that is the high of yesterday. The open of the day is here. Because we have gone above a bull bar on the daily chart, and yesterday was a buy signal, that was a reasonable place to buy. So the first drill I would practice is yesterday a good signal bar? I have a video of that on my channel. If you were paying attention to where that high was, even though this is all overlapping, do you think there are going to be strong sellers below that swing point? A trader is going to be buying every swing point they can all the way down, betting that we're going to get back to that price. When you look back at this day, you can see how many bars touch this price. But this is hindsight. But if you go back to other days where we trigger a strong bull bar, this is the same kind of relationship that you can use. What's another drill you could have used yesterday? Is a trend line. These were small breaks of minor trend lines, and that's important. But this move in the first hour was a major trend line break. This is a test and a sell signal. This is a really good reversal setup. You can see we came back to test it again here. If you were flipping between long and short many times in here, you can look at a higher time frame, see that this is a strong trend and that this will need a break and a double top likely to reverse. You also know that the market structure most likely to appear after a trend line break is a trading range. This is because this is a higher time frame breakout and there's a good chance it can go up there. So that's another drill that would have helped you yesterday, selling 21 or selling 31. What's another practice drill you can use to help you take better trades yesterday? Is a tight trading range in a strong trend. This is an area of agreement. This is an area of two-sided trading. Final flags have this kind of behavior. We break out of them, we come back to them. We break below them, we come back to them. I can pull this all the way through yesterday's price action. So if you were confused taking stop entries in here, that makes sense. This is a big version of this. Instead of traders looking to break out of this, they were waiting for it to break out of it in order to fade back to it. So you put a line through an area of tight trading and decide to trade towards it. What's another drill you can practice to help you take better trades yesterday? This is yesterday's high, and we've had 2 attempts to break out of the top of it. Both these attempts have failed. This failed here, this failed here. This is a very reliable short setup. You also had another chance to sell the test of it here. You can see later on in the day, traders were continuing to treat this as a failed breakout and fade it. What's another drill you can use to help you find good trades yesterday? This is a strong trend. Every time there's a breakout to a new high and a pullback, once we go above it, that's a high one buy. Every time we break out to a new high, pull back below the low of a bar, and then go above the high of a bar, we call that a high one. This is a breakout pullback setup. As Dr. Al Brooks says, if you take reasonable trades, 80% of the time you can avoid a loss. That means it's very common for the market to test good entries. If you spend your time looking and researching those good entries, copy that system, you'll find that your hit rate goes up and your enjoyment of trading will also improve. Here, traders have been able to take breakout pullbacks all the way up and they all worked until 10. Traders that bought above this bar are now stuck, but no problem. They were able to get out on 20. There's also another high one here above 20. Breakout, pullback, buying above the high of 19, you get filled on 20. You were also able to get out of it here. When the market is always in long, You find the highest high one entry because occasionally we're going to be the bulls or bears that buy that high tick. If you do something reasonable, you've got a good chance of getting out break even. In a bear trend, you'd call this the lowest low one. You can see here, traders were actually buying to get back to it as well. So by understanding always in long and the highest high one, that would have given you an opportunity to trade in that direction. Here's another drill you can practice that could have helped you take good trades yesterday. Here, it's very obvious that traders are buying all the high ones. But for some reason, up here, traders are selling all the high ones. Wouldn't it be useful to know when to stop taking trend entries and when to start taking trading range entries? Something happened up here that made traders stop buying high. Once this trend line was broken, this has had many legs up, traders stopped buying the high one and instead faded. All these ones worked, none of these ones worked. So looking to see where the high ones and low ones work is a great way to work out whether we're in a trend or a trading range. As long as they're working, don't fade them. The moment they stop working, there's an opportunity for traders to fade. With the benefit of hindsight, we can see traders were selling here. I was not selling here to get short yesterday. I was selling out of longs. I bought, I scaled in lower. I was exiting my position up here because I wanted to see what was going to happen. If we got this, then I just buy higher. But I was concerned we might get something sideways. Once you see consecutive bear bars, you know you're right. Don't buy high, don't sell low. A common mistake is to immediately start selling below bars. What happens instead is the market pulls back to sell higher. The market pulls back to sell higher. This was the great sell here. These were not great sells down here. So high one triggers, high one fade. This was a trap. Now we've got a spike down, couple legs sideways to down. Don't sell low. What are traders doing instead? This is a low one fade. So they're doing the exact opposite of this. Instead of buying high and scaling in lower, they're selling high and scaling in higher. As the market starts to move down, what do traders do? Instead of selling low, they're buying low and scaling in lower. Once you see this behavior in play, you need to synchronize yourself with what the institutions are doing. I'll make a further video on this because it's a really useful drill. What's another drill that you could use and find better trades? You can see this day has lots of reversals. Let's find signals that failed. Here was a buy that failed, was a buy that failed. Here was a buy that failed. Now let's find sell signals that failed. Well, this was a good sell signal. All the other sell signals worked pretty well. Now in a trading range, what do you notice? I can draw a line that lets a lot of these traders out if they scaled in. We're not saying you have to scale in. We're saying on a day like this, if you took good signals, the market came back. Here was a reasonable buy for a breakout. You had a chance to exit break even here. Here's another good buy that failed. You had a good chance to exit here. Why is this one not a good buy? Well, these have failed. So I need to respect that there are trap traders here and I need to see if they're going to stay in or exit. And you can see they got out. So if you didn't exit around 54, 58, 59, it's time to go. 31's a reasonable buy signal, but you're buying at the moving average. Even so, it's a strong signal bar. You could get out break even. This is a spike to a new low. 35's a low one sell. Selling the close or selling below that bar, we came back to test it later. This is what happens on trading range days. Well, thanks very much for watching. I hope you found that valuable. In this video, we reviewed yesterday's price action, and I recommended a number of drills that I think you should practice every day to help improve your ability to find these setups. You don't have to take all of them. You just need a couple of good ones to start getting profitable. My name's Tim Fairweather from Zen Trading Tech, and I'll see you in the next video.